my god, what happened? That's really weird. But yeah, welcome back. It seems like my camera is acting up right now. That is really interesting. Look at that. It's just it actually, yeah, it's vertical, and I don't want that. See if I can switch it back. No, it doesn't work. I'm gonna have to quickly check the settings. Fantastic. All right. Welcome back. Welcome back to Lucid Trading. Welcome back indeed. Hope you all are having a good time so far. I certainly am having a pretty good time. There we go. With many of my stocks doing relatively okay. Let me quickly. There we go. Fantastic. Yeah, I couldn't check my video settings while the intro was playing. Alright, fantastic. Alright, welcome back. Make sure you hit the like if you just joined. And welcome back to Rocket Launcher, John Smith, Adnan Akram, Tanisha, Rai Guy Parker, Ronaldo, Sam Koo, SJ, Thomas, Rick, Bassnett, The Black Man's Guide to Bitcoin, Shazep, Nishad, Jesus Martinez, Iverson, Trilon Musk, Juan Ramos, Jasper Cruyff, Lively, Ramin John, Chris S, and Chris and L. Welcome back. Welcome back to the stream. Alrighty. Yeah, what can I say? I mean, the overall market, it really feels like the stock market is partying like it's 1999. It's just every day we get all-time highs. Every single day, all-time highs, all-time highs, all-time highs on the S&P, on the NASDAQ, on the Dow Jones, not on the Russell, because everybody hates the Russell, apparently. I'm just kidding. But, yeah, it does seem like the market currently is... It's in a bit of a frenzy, right? It's a bit of a... You know, there's this saying, when everybody's greedy, you want to be fearful. And I think, honestly, I think a lot of people are being extremely greedy, are pouring all of their money into the market at any price. Honestly, I think I've been saying this for some time, that September would be the month of correction. And I still think it's going to happen. Frankly, I think within a week or two, we're going to see some significant downside. I'm actually also kind of speechless that this has been going on for so long now. I mean, if you think about it, the Federal Reserve is going to be tapering very soon, which basically means, right, when the Federal Reserve is going to taper, yields are going to go up, which makes bonds a more attractive buying opportunity. People go from the equity market to the bond market. And it seems like the market is just shrugging it off like it doesn't matter. And I just find that, I don't know, I find that like, that's exactly how the market is right now. It just does not care about anything. It will go up. It will have to go up. There's a lot of retail traders in the market right now. You got people busting up stocks that nobody heard about, suddenly jumping 100%, 200%. You know, you got the GME, the AMCs, you got the SoFis, the meme stocks, that kind of speculation. I think that is a warning sign when the normal people are in the market, when the people that would normally not be in the stock market are entering the market. That is a warning sign. When they're gambling on meme stocks, when they're not, people don't even care about fundamentals. People are just putting their money in stocks like 1999. Pretty much like 1999. Doesn't mean it's going to stop Probably not. I think this is going to continue for a little while longer. Although, like I said before, I've got 50% of my portfolio in cash already. And I'm not planning to buy any stocks anytime soon, unless I'm seeing some good buying opportunities. But yeah, it's time to be cautious. It's time to be cautious ahead of the market. Pouring some iced tea right now. Very nice. Let me just quickly close the window. There we go. Make sure you hit the like button if you just joined, by the way. I would appreciate that a lot. That would be awesome. Yeah, the market is partying like it's 1999. PE ratios, sky high. Margin debt, sky high. Inflation, sky high. Bond yields, very low. The Federal Reserve is about to taper. Markets are at all-time high. PE ratios are super high, like I said. Speculation, all-time highs. I mean, how many warning signs does one have to get, right? This doesn't necessarily mean that the whole market as it is going to crash right now. It just means you might want to be a little bit more cautious. A little bit more hawkish. I've made a lot of profit in the market the past 2 years, specifically, consistently. And, like I said, holding 50% of my portfolio in cash. Other 50% of my portfolio is in some stocks that I think are going to be going up, even when the market goes down, potentially head upwards. Yeah, so which stocks do I still own? I own AI, I own Palantir, I still own a little bit of Tesla. I've sold some Tesla when it hit 740. I own Neo. I own Alibaba. I own DIDI. I own a little bit of Tencent now as well. I have some Virgin Galactic and a little bit of Robinhood as well. And I'm planning to hold these. Of course, I got a longer term portfolio holding big tech, which I'm not doing anything to so far. I've got some short positions, very tiny short positions, not significant, right? On Google and on the Nvidia, Microsoft, and on Netflix and Nike. Right now, the most important thing is to not lose any money. The markets are sitting at all-time highs. The probability of a correction, it's imminent, right? It's imminent. We're in the month of September. Tapering is coming soon. It's imminent. The only thing you want to do right now, if you've had significant profits so far, you want to cash in on profits. You don't want to lose money. That's my opinion. It's maybe a little bit of a controversial opinion. Every YouTuber out there, I'm hearing this across the board. What is it? Don't time the market. The market could crash, but it could also not crash. Always put money in the market. That's literally every single YouTuber right now. It's crazy. It's like, yeah, the market could crash today. It could crash tomorrow. Maybe next year. Maybe 5 years from now. And they try to convince you that you should put money in a market where everything is at all-time highs, relative to all the market highs that we've had so far. This is similar to the dot-com. This is similar to '08. Probably this is way worse than '08 in terms of like how far stocks have gotten. Especially if now tapering is going to come and the Fed's going to raise interest rates in 2023. I don't think that mentality of, don't time the market. It's going to be fine. It's going to be perfectly fine. Just put your money in. You're a long-term investor. That's the argument right now. It's like, put your money into the stock market. You're a long-term investor. Just wait 10 years. Most people, they trade stocks on a monthly basis. Most people don't have the patience to wait 1 year. Leave alone 10 years. How many people are able to hold stocks for 10 years? The average person, paper hands after a couple months. So in my opinion, if you don't have the patience to wait 5 to 10 years, this is the worst time to put your money in the market. The absolute worst time. And I'll tell you why. I can show you some simple graphs. Like, we got an Apple growing from 50 billion to 2.5 trillion. You missed out of that opportunity. Amazon, same story. Google, etc. All those big growth opportunities have already come by. Right? It's already priced in. Well, it might double. Right. Anyway, I think Gara is referring to Casper. No, I'm referring to a lot of YouTubers. A lot of YouTubers. Damn. Every one of them. Oh, you can't time the market. So it's a great time to be putting money to work for you. That's the argument. You can't time the market, so just put money in the market. That's not how it works. If you don't know any technicals, if you don't know the macroeconomics, microeconomics, fundamentals, if you don't follow the news, you shouldn't even be in the market right now, honestly. This is probably the riskiest time to be in the market. And simultaneously, it could potentially be the most rewarding time. Because generally speaking, when the markets are this high, they go parabolic and then they come down very fast. And I want to rant about this because I've been seeing it on YouTube every day. I watch the same YouTubers you guys watch. Just to see what people are thinking, what people are saying here out there. It's nutty. Not a single sensible person is talking about a market crash or about a market correction. It's everybody is, oh, no, the market is not going to crash. It's not going to correct because it's just going to keep going up. Stocks just go up. That's the argument. That's literally the argument. Stocks just go up. There's inflation, so it must go up. I haven't seen something like this in a while. I think the last time I've seen a rally like this in the market was 2017, I believe. Let me just put that into perspective. Let's see. Weekly chart. Right. So, when was the last time that we had a 23-24% return on a yearly basis, right? So that's what I'm kind of worried about right now. Look at this. This is January. That's almost 25% in... It's not even been a year. It's been roughly... How long has it been? Like 9 months? We have 3 more months coming up. Once again, the stock market at all-time highs in 2020, end of 2020, beginning of 2021, proceeded to go up 25% in 9 months. 25% in 9 months. Right? How often do we see that? Not so very often, I'll tell you that. Generally speaking, what happens when the market goes up 25% in 9 months, it either corrects heavily, we're talking 10%, or we see a melt up top and then it corrects. And in both scenarios, you do not want to be in that run-up. So that's why I'm so worried. And I've been worried for like a year now, but every single time something happens that prolongs the bull market. It prolongs the bull market. Jerome Powell, never talking about tapering, never talking about interest rates. We're not thinking about tapering. We're not thinking about liftoff. And it prolongs the bull market. In 2017, something similar happened. I'll show you right now. So this was the beginning of 2017. We're partying like it's 2017. We're partying like it's 1999. Right? Stocks only go up. Watch what happened. In 2017, we were not even at the end of the bull cycle. We were like in the middle of it, right? We had a 28% run up, 28% from beginning to until the end of it. And this is we're giving some, right? We're giving some weeks in January. That top right there, it's roughly 25%. It's a similar amount to how much the S&P has gone up recently. What happened? Well, I'll tell you what happened. This is a year. That's a year, right? So the whole year of 2017, roughly 25 to 28%. In 9 months, beginning of this year until right now, we already have 25% to the upside. What happened right after? 10% correction. It rallied back up, and then we obviously had another downturn. This is not a favorable market for investors. It's not a favorable market for long-term traders, whatever that may be. Maybe if you're a day trader or if you like swing trading on a short-term basis, you will survive. But in any other scenario, I mean, there is such a high likelihood. There's such a high likelihood that this is going to come down very hard. And it's going to wipe out so many people that are using margin, that are using leverage. It's bound to happen. It is bound to happen, right? Now, I want to check, when in history, in the past couple decades, have we seen the stock market go up 25+%? And we're at the tail end of the bull rally. We're at the tail end of the bull cycle, the bullish cycle, the end of the debt cycle, so to speak. That's when interest rates start going back up. So, when have we seen this before? I mentioned 2017. What happened right after? 10% correction. And we were not even at the end of the bull cycle, the bullish cycle. Let's take a look right here. Start of the year. End of the year, 25%. And this was at the beginning of the rally, right? After the 2008 crisis and crash, we had consolidation. Then eventually stocks went back up. And I think that's the reason why it went up. And then it kept on moving higher. And PE ratios were completely different. Companies were completely different. And that's why we had a prolonged rally right after. What's actually more interesting is to see what happened at the end of bullish cycles. Right before '08, right before the dot-com, when the stock market went up this high. Let's just compare, right? Let's just do a comparison and see what happened. Did we even go that much in a year time? Right, so here, that's not even 20%. You see that? So 2007. Oh, sorry, that was March. My mistake. Right here. In 2007, this was the top of the market. We did not even manage to move that much. I think what's really interesting is what happened right here, of course. Even here, right? It's pretty flat overall. 17%. Back then, we weren't even able to move that much. In 2003, we had big moves as we were recovering out of the .com, right? Let's see. This is January. And see, we had a 30% move. And then after that, it consolidated. And that was right after the .com. This was perhaps the recovery out of the .com. And usually, the stock market goes up 25% or 30% when the market is recovering from a huge downturn. And there's more to come, right? We're not at the end of the cycle. We're at the beginning of the cycle. Now, I'm arguing that we're at the end of the cycle and that COVID, the corona pandemic, was not a financial crisis. It was a health crisis that had impacts on some businesses, a lot of businesses actually, but it was not a financial crisis. It wasn't comparable to '08. It was not comparable to the .com. He'll tell you to buy gold in every market. Well, I'm not telling people to buy gold necessarily. It's just more manage your risk properly. There's a lot of risk in the market right now as it's going up, Every percent that the market is heading up and you're not in the market, that's a percentage you're not going to see. Even if you're in the market, that percentage is now priced in. You got it, and you're not going to get it again. Let's look at what happened prior to... Let's just look at the .com. Let's just compare the current market to what happened in the .com. When did we see stocks go up similar amounts during the .com? Did we see that happen, right? The S&P right here, beginning of 1999. Markets are partying like 1999. Look at this. Okay, here we go. Our stock market today has gone up similar amounts to the stock market during the .com period. You see that? 27.5% in 1 year. That was 1 year. Our market has done it in 9 months. We have gone up as much as what we have seen in 1999 in 9 months. We have outdone it. We have outdone the .com. Will stocks go up further, or are we going to see a lot of downside? You decide. I personally think we're going to see a correction. I've been saying this in September, this month, in about a week or two, because we have the Fed meeting coming up at the end of the month, which is uncertainty because we might get some tapering. But we have outdone 1999 in percentage gains in 9 months, or close to it, right? Which is just baffling. It is baffling. Gara, if you know a 10% correction is inevitable, then why aren't you 100% in cash? Because I don't think it's going to be a crash. I don't think the stock market is going to crash because the Federal Reserve is still accommodating the markets. That's why. I want to have some cash on the sidelines to be able to buy any kind of dip that's going to be coming. And if it's not going to be there, hey, okay, I'm holding 50% cash, no problem. But right now, just to put things into perspective, remember the .com that people always talk about, the 2000s? In 1999, the full year of 1999, the market went up 27.5%. This year, in 9 months, the S&P went up a similar amounts in a shorter time frame. Is the market going to correct? You answer. I don't know. Maybe. Who knows? I can't time the market. Like all the YouTubers out there say, don't try to time the market. Just put your money in the market every month. It's going to be fine. And if the market crashes, just wait 10 years. Think about it. Does the average person wait 10 years? No. Does the average person have the patience for waiting 5 years? Probably not. Not even 1 year. Most people that are now in the market are holding stocks maybe a couple days, maybe a couple weeks, and then they sell them. Think about it. What happens if the market comes down? What happens if we go into a bear market? You know, God forbid. Everybody is gonna get wiped out. That's what's gonna happen. I think that's probably gonna happen next year. I think maybe this year, depending on the tapering. But yeah, I just had to put some things into perspective, right? Some people saying, hey, Gara, maybe you're overdoing it right now. What if the market just keeps on moving upwards? We're pretty much in a dot-com kind of scenario. We're looking very similar right now with, although I have to argue that most companies, well, big tech obviously is not the same big tech of in the past, right? They've got lots of revenue, they're growing, etc. They've got cash flows. Yeah, there we go. There we go. There we go. That's the arguments that we get. This time is different, Gara. That's the argument I'm hearing right now. Gara, this time it's different. It's different this time. We'll see. I don't know. Let's see. Has there been another time where we have seen a rally like this? Yeah. Yeah, 1998. Let's see. 1998. 1998 is... Okay, it starts right here. The beginning of it right there. Just to put things into perspective. Okay, there we go. 1998. 32.6% to the upside. Let's say this is 1998. We're right now in a similar scenario to 1998. And we see another 5%. And we're heading to a market top, which could very much be plausible. If you're a long-term investor, you're going to get wiped out. If you're a mid-term investor, you're going to get wiped out. If you're a short-term investor, you're going to get wiped out probably. Unless you're timing it, like, oh, I'm going to get... next year I'm heading out. And then this was the start of the run-up. But here it got quite extreme. Nevertheless, even in the best case scenario, it's like either there's going to be a lot of growth, we're going to see so much incredible growth that it's going to be outpacing everything, and then the stock market can keep on going up or maybe just consolidate and not crash. Or we're just going to see what happens every single time, which is the market is going to take a bit of a breather. Look at the technicals. What's happening on the NASDAQ? It's overbought on the weekly basis. Every single time that the NASDAQ is overbought, it corrects about 10-20%. And we're getting there. I'm giving it another week or so, right? I think we can still hit 16,000 on the NASDAQ. But yeah, there is... if you're breathing, you're going to get wiped out. Exactly. Let this be a message. Let this be, be cautious, be hawkish, be contrarian, be critical, right? Think for yourself. Don't believe the markets. Don't believe the media. Don't believe whatever YouTubers are saying. Even me, don't believe me. Take it in, compare to whatever information you have, and make your own conclusions. I think this market it's been great so far. I mean, I've made a lot of moolah. It's been great. It's been awesome. But there are risks. There are heavy, heavy risks. And history shows us that those who are not prepared will get absolutely wiped out. We're talking all the way to zero. That was my rant, okay? All right, let's see. Welcome to the stream, by the way. Welcome back. Welcome back to the stream, to everybody. Welcome back to Lucid Trading, where we talk about the markets every single day for market open and market close. And I would love it if you would hit the like button. That would be awesome. And let me know in the chat, do you think the markets are going to keep going up? Are we going to see S&P at 5,000 and then S&P at 6,000 in the short term? Or do you think we're going to see a correction or maybe even a crash, right? Let me know in the chat. I would love to know your opinion. I think that rant that we just had, it was, you know, people need to wake up, right? Wake up. Markets don't go up forever. Even if some growth stocks haven't recovered yet, it could still get bloody. Speaking of bloody, oh my god, DIDI is down 5%. No, oh, that's just painful. DIDI is coming back down roughly 5 percentage points. Yeah, so I have no idea what's happening with earnings here on DIDI side of things. Do you think markets will keep going up forever into eternity? That's the real question, because most people think that. I honestly believe that 80% of people think that the markets are going to go up forever. Forever and ever and ever without any breaks. I should have framed the question differently, probably. Because it could go up forever. I mean, this is the wrong question. I have to agree with that. Oh well. Let's have some fun. What a great question. I agree. All right. Let's see. Baidu down 1.7%. Alibaba down 0.5%. DIDI down 4.7%. Tencent down 1.6%. Yeah, the Chinese government, I mean, honestly, coming out, doing some crazy stuff here. They want to start a stock exchange in Beijing or something. It's just this endless FUD. It just keeps on coming from China. Pushing the Chinese stocks lower again. Let's see. Does that work? Yeah, it's tripping right now. One second, I'm gonna have to fix my camera real quick. Yeah, that doesn't quite work, eh? Alright, this should be fine. Gara has convinced me to go 100% cash. I don't know. I don't like going 100% cash. Because you truly do not know what will happen in the market. But having cash around is also nice when you know that the markets are overextended and just still going higher and higher and higher. PE ratios are is sky high right now, although they've come down a bit because of earnings this past year. The only reason that stocks are still going up is because the 10-year yield is sitting at 1.3%, and relative to inflation, that is unattractive. So once the taper happens, once we see the tapering happen, and the yield goes up, guess what happens? People in the stock market, fund managers, are going to decide, the stock market is sitting at all-time highs, but the 10-year yield is rising. I could get a nice yield right here, and the stock market is probably going to fall at some point. I might as well get into bonds. And then you'll see this huge amount of capital coming out of the stock market. It's going to the bond market, and the bond market is massive. It's a lot larger than the stock market. And that's my fear. That tapering is going to have a very negative impact on equities. And that's a crazy thing, right? So a lot of people are actually saying that it's not going to be a negative thing. That it's going to be good. It's going to be good for the markets. I heavily disagree with that. But yeah, we'll see. We'll see who's going to be right in about 3 months. So the 10-year yield is not going to go up anytime soon. I don't think so. I think it's going to go up. Over time, right? It's not going to go up tomorrow. It's not going to go up next week. Over the next coming months, I do believe that we're going to see a rising 10-year yield. Especially if we look at the MACD. I mean, that is quite convincing. Especially with tapering. The tapering is not going to help at all. Yeah, Russell double bottom skyrocketing right now. We're going straight up to that all-time high. Straight up to the 2,300s. Tesla's heading down. Neo still recovering, right? Neo's down a lot still. It hasn't really been doing anything. If you would take a look at the prices of Neo, for the past year, it's just been flat, right? It's been sitting at 40 on average. XPeng kind of sitting flat here as well. Li Auto did pretty good with delivery, so I think that's going to be interesting. Yeah, let me delete this arrow. They did not crush earnings. Earnings were moderate. Why not short companies if you think it will happen? Because you don't really gain that much from shorting. Companies can go 5x, 10x, 100x, whatever. When you're shorting, your maximum gain is about, what? Generally speaking, around 50 to 60%. It's not even worth it. But yeah, I am shorting some companies with small amounts of money just to hedge, right? So hedging my long positions. I'm shorting companies like Google, Microsoft, Nvidia, and I think I had PayPal on that list as well. PayPal, Nike. Small amounts, couple $100 per stock, with a little bit of leverage. Which is going to help me with like hedging the portfolio, because then when the market goes down, those small short positions can become quite large positions in a positive sense, and I can sell those or buy back and then get back into some nice long positions at lower prices. Shorting has a lot of risk. Yeah, it is. It's not that. Yeah, not that great. It's very difficult too. All right, so C3.ai is down 10%, sitting right around support. It's not going to do anything right now. There was, I think, the CEO, Siebel, Thomas Siebel, actually was on Yahoo Finance for a bit. That was quite interesting. Not a lot happened though, of course, but just reiterating, like, oh, okay, yeah, you know, we're growing, this and that. Nothing significant happened there, though. Let's see if I can fix the lighting. Oh, 23%, right? Okay, so start of January, right here. Oh, it's actually right here, right on here. 23%. 24. We're on 24, 25% from the beginning of the year until now, which is still crazy because, I mean, we have 3 more months left in this year, and it's already up 24.4%. I don't think... How much of the money supply... How much did the money supply increase? Was it like 30% or something? I mean, we're at this point where, like, it's already priced in. Everything is priced into the market yet. So, sketchy. How much of a gain did we see in 2019? Or, sorry. Yeah, 2019 to 2020. That was massive, wasn't it? That was 18%. Oh, that wasn't even that impressive in comparison to our rally that we have today. I mean, this is insane. Let me check what's happening with the NASDAQ, actually. How much have we seen the NASDAQ go up since the beginning of this year? Must be a similar amount, I think. Just grab that. There we go. Yeah, roughly a similar amount. I mean, for the NASDAQ, I think we could still see a little bit more. But for the S&P... I just doubt it. Even the Dow Jones. I think even the Dow Jones went up a lot. 18.5%. I mean, how often do you see that happen with the Dow Jones? It happened in 2017, I believe. Yeah, there you go. That was, oh my god, that was crazy. Such a massive gain in the Dow Jones. $30, 33.8%. And then we had a huge correction and sideways movement for like 2 years. You can see that right here. Correction of about 11%, and then a massive correction of 20%, and sideways movement for, yeah, that's about, no, for even longer than that. 501 days. Oh my god. It took that long to see some more upside from that all-time high. I think this is going to be in the past. Every move that we have seen while yields were low, that's the past. We're not going to see that anymore. We're not going to see a Palantir hit 50 or something like that. I mean, 30 is reasonable, maybe 35. But those times are gone. You know, and it also happened because of Wall Street bets, right? This huge spike. No wonder Palantir is buying gold right now. Like, no, absolutely no wonder. Baba is down 0.5%. But yeah, the daily chart on Alibaba is looking pretty good. MACD's crossing. RSI rising. Volumes are spiking still. Looking at the 4 hours, looking a little less good. Looking like it's coming down quite a bit, actually. Could come down as low as even the 162. It could still happen, you know. That would be a loss of roughly 5.5%. I think that's the worst case scenario right now. Oh yeah, power hour coming in here. Let's go. Alrighty. Big banks are heading up. We have the Nano Dimension. Nano Dimension going up 2.7%. BNGO up 1.5%. The Russell is still going up. Look at that. Up 0.7%. Very nice to see that. Bitcoin falling off the 50,000. And Ethereum is only down 1.3% after the big spike. It's almost like 20%, right? Just in a couple days' time. 20% added to Ethereum's market cap. And Cardano up 3% today. Let's delete that. Coinbase is barely up, right? That makes no sense. Well, I would say the market is also not doing so well today. The NASDAQ specifically. If you take a look at big tech, look at that. Facebook down 1.8%. Google is going down 1.1%. Amazon down 0.5 percentage point as well. Likes of Microsoft in the red. Apple still green, but you know, It pulled back about a percentage point from that top. Hold up, somebody said in the live chat, if the market corrects more than 10%, money would be flowing from crypto to stocks. No, that would not happen. If the stock market corrects 10%, you best believe the crypto markets are going to correct as well. So you're going to be in this situation where everybody, both that are holding stocks and crypto, are holding assets that are down. So you're not going to see that happen because cryptos are kind of coupled to the market. We've seen this happen before where the markets come down and you see the cryptos come down along with the markets. And I think that would be the case. They are not decoupled from the stock market. Think about it. The people that are holding stocks are holding crypto. The people that are holding crypto are holding stocks. Not everybody, but quite a huge amount of people. It influences one another. And also, obviously, market makers are holding stocks and crypto and others. Let me know in the chat which stocks you want me to take a look at. Currently looking at the stocks that we always look at right now. Lucid Group up 5%. Not filling the gap completely, but you know, it recovered about 21% from that bottom after the lockup period expiration. Market cap is sitting at 30 billion, which is still quite significant. Yeah, it's not that low. So yeah, keep that in mind. DIDI is down 4.2% still. It just never ends with DIDI. It's a never-ending spiral. I'm going to quickly check if DIDI actually has earnings coming up. I couldn't find their earnings. Still can't find it. It was supposed to be September the 1st, at least according to TradingView. But I'm looking at it right now on Google. Last earnings was June 2nd. This time around, I think it's going to be, June 2nd plus 3 months, which is a quarter. Maybe September 2nd? I have no idea what time, though. Which, they haven't announced this on their website, which I think is just horrible. They should be announcing this kind of stuff. Latest news. Can't find it. Yeah, so nothing on their website so far. Gara, your arrow is wrong? I mean, it went up 16.8% before it was wrong. It was quite nice. It's a nice arrow. It's a nice little hunch. It pulled back right here after there was news coming out about the unionization and the Chinese government doing whatever it's doing right now. Obviously, that is having an impact on the market. We've got a $10 donation from Masi Rasoli. Masi says, "Hey brother, long time. It's Masras. A detail on Lucid and Neo, please. I'm in Neo at 43 and Lucid at 26. 21. When do you think the correction starts?" All right. Thanks for the donation. Yeah, I warned about Lucid Group. I said I was going to go out at earnings, at the merger, that I was going to be completely out of it. And I kept on warning about it because I thought that it was going to come down even further to the lower 20s, which happened. I think in all likelihood it is rebounding short term. It's oversold. But yeah, we probably have a correction coming up this month. It's a probability, right? It's a high chance. We've been warning about this for 3 months now. Like, oh, it's going to happen at the end of June, end of July. And then Jerome Powell comes out and is like, money printer goes burp. And it gets delayed. On every time frame, I mean, it is looking oversold. MACD's crossing. And I think what we're going to see here, we're probably going to see it consolidate here. And then eventually fill the gap back to 20. Hopefully. I'm not sure if it's going to trend back upwards again. I mean, we would have to see a significant catalyst for that to happen. And keep in mind, the lockup is still going to have an impact. The lockup period expiration is still going to have an impact. Insiders are still selling. But it could go back to 20. It could fill the gap, get back to 20, consolidate, and then gradually maybe we'll get back to somewhere like $21, $22 at the end of September, beginning of October, possibly. We'll get back to 26. I think we're looking at December for that, maybe. November, December period. That's when they can show some of their deliveries. Like, hey, we've delivered some vehicles. And so we're looking at another quarter. And then it's going to be back around 25, 26. Yeah, this lockup is really taking a toll on the stock price for Lucid Group. Worst case scenario, this bad boy is going to get back to 16 because of the September correction. Back to 16, maybe even 15 for a brief time. But I don't think it's going to stay there necessarily. Like, I think it's going to bounce back the same way it bounced back right here. So, yeah, that's what I would say. Thank you for that donation, Masras. Appreciate it. And, yeah, I think... Hold up. But yeah, keep in mind, I mean, Lucid Group, it's incredibly risky. We don't even fully know if this company is going to deliver. Right? So... just keep that in mind. I don't know if this could be the next Nikola. They haven't delivered much yet. I don't think it will be a Nikola. There's always that tiny little possibility, right? Just saying. And so it's not financial advice or anything like that. Not trying to be a financial advisor. Just trying to give an opinion. Yeah. Neo is sitting at 40.5. I like Neo a lot right now. Even with the bad deliveries, they did not have enough supplies to deliver. So it's not that people don't want their vehicles, it's the supplies, right? Which is still bad, but it would be worse if people would not want their vehicles. That would be a lot worse. So in my opinion, I mean, we're going to go straight back to 42, 43, and then maybe correct again afterwards, you know, around middle of September, right before the Fed meeting at the end of the month, possibly. Hold up. One second. Oh, there we go. Settings. Oh, come on. What do you think about SoFi? Yeah, I think it was sitting at 14.5. I thought it was looking quite attractive. Yeah, it's now sitting at 15. I think it's going to go up a lot more. Yeah, it's having a tough time to go above 15. But, you know, looking at the daily chart, they're still sitting neutral. I mean, although historically speaking, it doesn't go that much higher. I think eventually we're going to get back to that 16.5. I would say throughout the month of September. The UVXY will go up tomorrow. It's sitting quite low. So, yeah, I mean, who knows, maybe. VIX is going up right now. Look at that, 4%. That's interesting. VIX is starting to move. And the markets are not taking note. The markets are just casually doing their own thing. It's so crazy. Like, we have a jobs report coming out tomorrow. If it's good, then the stock market's going to go up. If it's bad, the stock market's going to go up. You know, it's so messy. It's so weird. If it's bad, they're going to frame it as, oh, well, then Jerome Powell's going to help the market. And then the market goes up. If it's good, it's like, oh, wow, the economy's doing so well. And then the stock market goes up. It just doesn't make sense anymore. I think it's broken in some sense. It's like it can just go upwards, but it can't go down anymore. This is why I'm like 50% cash. I'm going to repeat this very often. I'm 50% cash. I'm going to look like an